Market leader, it's pretty clear. It's healthcare, and that makes a lot of sense. Some of these vertical mergers looking a lot more promising or approval for them. Just take a look at the sectors right now. So healthcare leading, we're getting some modest moves up here in the financials, but they haven't been market leaders much this month, unfortunately. Tech is flat. Industrial is another one not doing too much. And energy has stopped being a big help to the S&P more than a week ago, and that's a little bit of an issue here. Meantime, healthcare, as you see there, is the market leader. Some of these vertical mergers are much more likely now to get approved. You see CVS and Aetna both on the upside. Cigna's now down, but Cigna's going to be acquiring Express Scripts, and you see Express Scripts up nicely there. So obviously some effect overall in the markets on that. Important to remember who our market leaders are. The S&P's up about 3%. It's been a terrific June. Retail just far and away been fantastic numbers here. Some of these big classic retailers up double digits. Material strong. Historic high in consumer discretionary because the retailers have been strong, and Netflix and Amazon have been strong. They're in that group as well. Tech is performing about in line with the markets, and financials have been lagging a little bit. So financials and energy don't have quite the oomph that they had before and are not contributing as much as they used to. So we're really relying on consumer discretionary and to a certain extent some of the other stocks like materials. Elsewhere, it's market movers today. Well, we've had some positives this week. Obviously, North Korea is incrementally a positive. Certainly the AT&T Time Warner deal is a clear positive for the markets, but there's risks out there. I think the Federal Reserve is potentially risky today, and there's been some discussions about China trade tension, that perhaps President Trump would impose some trade tariffs on China. There was a big story in Politico this morning that was passed around on a lot of the trading desks this morning. I got questions about, so that sort of floats out there as well. In terms of what the Federal Reserve is talking about today, there's an unusually large number of questions that traders had in terms of what's going on. There's a general feeling that a lot of the Fed may remove or alter the phrase. The stance of monetary policy remains accommodative. That's the key classic phrase. Maybe either remove it or put in somewhat accommodative, something like that. That will change. Of course, 1 or 2 more hikes in 2018 after this one now is the big issue here. There's discussions about a press conference every meeting. That does not sound hawkish to me. That just seems logical, but people are greeting it as potentially hawkish. And of course, then there's the potential for more aggressive economic and inflation forecasts. That's good news if we get a better economic forecast overall, but it may add to rate pressure. Remember, PPI this morning was just a tad hotter than people were anticipating. So a lot of stuff floating out there that could potentially move the markets later today, unusually large number. Finally, just want to note, I don't pay a lot of attention necessarily to downgrades and upgrades, but a comment from Credit Suisse about Hershey's was very interesting and sort of applied to the overall market here. They downgraded Hershey's today. Now, Hershey's down 20% this year, so a little late on a downgrade, but shifting to online purchases, they say, by shoppers reduces impulse shopping at the checkout lines. Now, this seems obvious to me, and it's a little bit late for the company to actually come out and mention that, but you see it's moving the stock down 3%. So we're down essentially at the lows for Hershey for the year. $90 was the low here, and that would be probably at least a 2-year low for Hershey's at this point. So stating the obvious is even moving these stocks right now. Right now the Dow flat at 25 points on the upside.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.